Welcome to Trading Lounge and the US stocks for the 22nd of June. Starting with NVIDIA here on the 4-hour chart. Counting from the low here, we're looking at wave 1 here. We've got 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5 for 1 here and 2 here, and 1 and 2 and 3 and 4 and 5 in here for third, fourth, and then there's also 5 waves in here. It doesn't look like it, but there is. And then we're looking for an A wave, a B wave, and a C wave pulling back into here for wave 4 here. Because it's pulled quite high here above the 61.8% of, let's go into the tick chart and have a look at this. So squash this back up a little bit. This is 100 ticks. So what I was thinking is that wave 3 here is an A wave here, and then an A and a B wave and a C wave here that would count up in 5 as 1 and 2 here. Then the third wave is 1 and 2 and 3 and 4 and 5 for the third wave, ABC for the fourth, and 1 and 2 and 3, 4 and 5, blah, blah, blah for the fifth. So it's a nice ABC, but it's only an ABC if this low gets taken out here for this. We're expecting a lot of other stocks to be pulling back, and it wasn't. If the Nasdaq and the S&P closed strong on the Friday, then Monday would follow through and be bullish. But we're not expecting that. We're expecting it to be lower. In this case, I know that we had all the stock witching, stock expiry and options expiry and so on and so on. So that might be just a little bit of a spanner in the works. We need to be mindful of that. I mean, this wave 4 here can be in place over here, but if this market does move up from this point here, moves above the top here, then you know that we're in a bullish pattern from that point, and then I would suggest that look for support on top of 80 there, a classic trading levels pattern, the arrival, the reaction, the first high above the level, a little ABC pattern like that, and then take these highs out here. That will take you up into the 400 at that point. But if that's not the case, then we're going to be moving lower down into here. And because from this high here to this low here, the 61.8% would be roughly around here somewhere. So the market's pulled higher than that. If it only pulled to here, then we would expect the market to pull much deeper here. But because it's moved much higher than the 61.8%, it means that it's strong, and it's only likely to come back down into these previous lows here. And we'll also be looking for 5 waves here. So we could short it here if this low was taken out here. Okay, and we're just looking at half a position, just a thin line rather than a thick line. So just half a position or third a position or whatever you decide to do with your account side, because it's higher risk. But the risk reward is there, so that's okay. The general market should be sort of pulling back. Amazon is topping out. Nasdaq is, as I may have mentioned, is resolving itself at the 10,000, so it's spent enough time there. Doesn't look strong. It needs to pull back a little bit, and that's what we're sort of looking at in that space. So yeah, okay, that's that. Let's have a look at Netflix. So with Netflix here, I won't go to the tick chart, I'll just go here for this. So this was the same situation here as well. I just need to go over this, is that we could look at this in 5 waves here, then I could look at this in 3 waves here. So I'm thinking like an A, B, C here for this, and then down for the C wave for wave 4. Now, that could be the case, and we could have wave 4 in here. Otherwise, we were looking for all of A wave here, the B wave up here somewhere, and then coming down for the C wave. So that's in play there as well for this, okay? So that can pull back into this space here from there. Now, obviously, we've had some long trades in here. So we've got the half a trade here, a full trade here on the long side. The stop was down here. I've just sort of moved that up here for a bit. Our aim was to take percentage here for this. So I'm thinking that, you know, I'll find out where to leave the stock. I know where to leave it at 436, but you know, we could get taken out and lose all of that. So I don't really want to do that. So I'm going to change this here from percentage to taking profit here at this level here, and because of the state of the other market. And then I'll just leave this wave B in here. But once again, if we find this top here, so we've got it's basically this pattern here. So the arrival, the reaction, the first high above the level, then in the ABC, and then finding support over here. So we we wait for this top to come in play, and then that's our reference point. We can use that to add to later. I know there's always a bit of a scurry around the old high, but double tops are never the end of a bullish trend. So then we can look to this low here, and then if we can refine it to this low here. So I think that we'll do this across this level with this market here. So at the 450 here, we should see this. If I can just draw this out here, it'll be, well, it's already there, isn't it? The arrival here. So I've got the arrival and the reaction. So that's cool. So is the first high above the level finished yet? I don't know. Maybe. But look, it doesn't really matter. So if the market pulls back down from here, right, there'll be 3 waves here like this. Now, that gives us our entry points up here to go long again. And also too, once this here, if that moves up through there, that's fine. But also too, what happens now, if you can see the count, if you know what you're doing, it's fine. If you don't know what you're doing, don't do it. So if you can see 3 waves coming down here and then the market retests back up here, well, then you can short, not on the first one in this case, but on the second one, because that would be the ABC pattern here, and that would be somewhere down into this space here that you'd wait for that. So if I can just adjust this here, we might be able to, well, that's not adjusting very well, is it? So I'll put that there, get rid of that. If that moves up from there, then Bob's your uncle. But if not, and it comes back down below this level here, well, then you can look to have a short trade in there at that point. And I'll just put that green line in there and remove that. And then you can go short from that point or long from that point. I mean, that's all trading is support and resistance and trading from one number to the next number of the same degree. So because we use the Fibonacci as price relationship, so as from 400 here, all the way up to 500, we just break the problem down into Fibonacci numbers 1, 2, 3, 5, and 8 here. And of course, we use group 2 here, which is 65, 72. You can adjust that there. So this becomes group 1. This becomes the midpoint, 5 being the second strongest number in the market. And then we've got group 2 here. So getting from here to here, understanding the levels, breaking this down, you can break them down further, but this is a medium level here, major level here, and just the minor levels in through here. So it breaks the problem down. If you've got a problem, then you need to break all the elements down and then, you know, unpack it and then pack it again. So that's what we're doing. And at the end of the day, it is a game of support and resistance. And, you know, if you understand what support is and resistance, how a market tests a certain number, because this will be the balance line here at the 50, the number 5 here. So that's not so much about the 4, but it's about the 50. So that as support or resistance, and the classic trading levels pattern or variation on that would be fine. So yeah, we're just going to take profit here. So I'm just going to go to my spreadsheet here and close that out. So as I mentioned, just because we started the US stocks, I'm just keeping a bit of a spreadsheet on them, and I do have an accounting program for this, but I need it fixed. But the guys in India are having their own problems with the COVID situation, so they can't fix it just yet. But it's in process. So I'm just going to remove that trade from there, put it over here, and close that out here at target 450 roughly. Okay, so that's that. Let's move on to what was the next one we're going to look at? Alphabet. Rightio. So Alphabet. Okay, so I might as well just start here, I guess. So just from the low here, we've been counting up as 1 and 2 here, and 1 and 2 and 1 and 2 and 5 waves here for the third wave. Third of a third's got the gap in it. That's the trend that everybody wants. They want the second, the third of the third of the third, and of the third in this case, because that would also be 1 and 2 here as well, and 3 and 4 and 5. So I think this count is okay. And yeah, the only other thing is I could have this wave 3, which is this wave 3 sitting here, but I'll run with this because this is in line with some other stocks that we've got. So we obviously talked about shorting this last time, so shorting it from this point here, and the idea was to really just, if I can just keep the stop above the level, wherever that may have been, and then now we can just bring it down to this level here. So I'm going to bring it down to 447 here. So we're just really keeping above the 5 in that case. Otherwise I've got to go above the 8 there. So 447. And don't put it right on 7, but put it on 4 again and 7 again, if that's the case. So we'll just have this one here. So yeah, look, in this case here, we're looking at an A wave here, a B wave here, and a C wave here, really just to come down to the wave 4 here of, well, just into this space here, because it moved up quite high here. You know, if it only moves up to 61.8%, then we could come deeper, and it may come deeper, but at this stage here, I think we'll just take the money off at the 1400 there. You might be able to squeeze a bit more out of that, but we just really want to get from one number to the next number of the same degree. So we're going to put that, well, I'll just put it there. And yes, of course, it can come lower, but you know, there's quite good support across this level here, so we'll just leave it at that. So we have brought the stop down, that's good, and Google 447, target 14, got the wrong number there, 1400. So target, that's all good. Okay, so yeah, looking for a weaker week this week. But we are looking at it in terms of a corrective pattern for, you know, all the markets. So we'll just run with that, but we'll just see. And this countdown here would be wave 1 here, back for wave 2, and going into a bit of a third wave here, and then a fourth and a fifth wave coming in to these lows here. There'll be some sort of equality between wave A and wave C here. And wave 4s can get more complicated than this as well. We've got it as a simple ABC correction, but it could get more complicated in terms of a triangle and some other things, but we'll just stay with this for the time being. I think we're, based on what I can see with the S&P and things, I think we're pretty well right for a small correction to 1400 or even a bit lower. So the level below that will be 1380, and then 1372 in here. So that's all of group 2 in here working. Alrighty, that's it. So thanks for tuning in. Thanks for the support. Cheers.